don't believe the Brics feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up, because they see a treasury bond default, because they see a government debt. The United States, it's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold a lot better than the Western nations do. Therefore, they're going to continue with their gold load, increasing
Welcome
their
to
gold
Economy
reserves,
Express,
make
your go-to
usage
destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
The Brics nations, Brazil, Russia, India, China, and South Africa, are strategically accumulating gold reserves. This move is possibly aimed at backing a new trade currency in anticipation of a potential financial crisis and a U.S. Treasury bond default. China and Russia, along with India and Turkey, have significantly increased their gold reserves since 2010, with substantial purchases continuing into 2023. Analysts speculate that the Brics nations may be preparing to implement a gold-backed trade currency. This reflects a cautious approach amid advancements in blockchain and cryptocurrency technologies. Despite their ongoing efforts, the Brics nations do not feel an urgent need to fully implement alternative payment systems. They are temporarily relying on the Chinese yuan and other regional currencies for trade. Jim Willie predicts a significant rise in gold prices, potentially exceeding $3,000. This is driven by increasing demand from Eastern nations and central banks' accumulation strategies. The United States faces an inflationary depression, with economic indicators diverging from official reports. Rising inflation rates and government debt exacerbate the situation, leading to concerns about the country's financial stability. Central banks are bolstering their gold reserves to prepare for potential financial crises, with significant buying by Rothschild central banks anticipated to drive gold prices even higher. Large insolvent banks face challenges with depleted inventories and significant losses on treasury bonds, pushing them towards gold as a safe haven asset. The U.S. Treasury faces difficulties with unsold bonds, leading to increased reliance on the Federal Reserve and foreign entities to buy back bonds. This further complicates efforts to reduce the Fed's balance sheet. Foreigners are selling U.S. Treasury bonds at a record rate, necessitating the Treasury Department to buy them back and place them on the Federal Reserve's balance sheet. The surge in gold prices underscores its importance as a safe haven asset, offering protection against financial instability amidst signs of an inflationary depression. In the U.S., Jim Willie and analysts emphasize the significance of gold accumulation by central banks and its potential impacts on global economic stability and gold prices. They urge individuals to consider gold as a key asset in uncertain times.
as possible for maintaining sanity and when there's just too much on the plate. I'll be honest with you, I'm trying to learn what ENDGAME is. I believe it's some form of payment system involving gold. Okay, here's my simplistic perception. The Brics are in absolutely no hurry to install other non-dollar options. They're in no hurry at all. They can rely on the Chinese yuan because China said on a temporary basis you can do that. In Eastern Europe, they're using more and more ruble for settlement. With India, Russia has a problem. India wants to use the rupee. Russia's saying, we'd rather you not pay us in rupee. And Russia would prefer the Gulf region types like the dirham out of UAE, United Arab Emirates. India is pushing back on that. We have now the blockchain that is being built out as a platform. That opens the door to XRP. Its on-demand liquidity makes it a great candidate. I don't believe the Brics feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up because they see a treasury bond default, because they see a government debt for the United States that's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold a lot better than the Western nations do. Therefore, they're going to continue with their gold load, increasing their gold reserves to make available usage of the gold token. The gold token requires the parties to have adequate gold reserves behind the token. You can't just say, well, we're going to use the gold token. Well, do you have the gold behind the token? That's what they're doing now. It's going to be Russia, China, Persia, and Saudi providing the gold. And China will be more the dynasties than it will be the government. The government is, I tell you, the government, they're coming out with all this information about the People's Bank of China and all their increases in gold. Oh my gosh, they're buying probably 10 times that off the book. They're setting the stage for the Rothschild central banks to load up on gold quietly and secretly. And then once we get near 3,000, they're going to push it to 3,000 flat, 5,000 then in the following, who knows, several weeks. And in the following months, 10,000. And miraculously, the Rothschild central banks will work their way out of insolvency. And to do that, they need a lot of gold. You don't just buy, 20 tons of gold and, oh my gosh, we're out of insolvency because the price went up fourfold. That's nonsense. You got to buy a lot of gold, and they will not be selling it. Those people who think, my gosh, there's so much gold out there, it's going to go down in price. I say there are a lot of televisions out there, and they're not for sale, and the price is not going down. There are a lot of shoes out there. They're not for sale. The price of shoes is not going down. It's one of the dumbest arguments I've ever heard from smart people.
The current economic climate in the United States reveals troubling signs of an inflationary depression, where economic indicators diverge significantly from official reports. Despite claims of moderate inflation hovering around 3 to 5%, the reality paints a much bleaker picture, with many categories of price inflation registering rates double the reported figures. In the past several weeks, government data has shown that inflation remains stubbornly above the Fed's 2% target, and that the economy is still growing robustly. Year-over-year inflation rose to 3.5% in March, from 3.2% in February. With inflation rising, the Fed sees the need to raise interest rates to curb spending and stabilize prices. However, such a move risks stifling economic growth and exacerbating the depression. Conversely, lowering interest rates could stimulate economic activity, but may fuel inflation further, worsening the situation. Adding to the complexity are the challenges large insolvent and central banks face. Jim asserts that depleted inventories and staggering losses on treasury bonds, amounting to nearly $1 trillion, leave these institutions in a precarious position. He sees that their inability to short the gold market further limits their options, prompting a shift towards gold as a safe haven asset amidst the economic turbulence. Let's get back to the interview.
The inflationary depression in the United States is becoming more and more evident. Falsified economic statistics. We've got now like 5 or 6 categories for price inflation, and they're all double the official aggregate stated price inflation. They're saying it's 3, 4, 5%. We've got numerous items that are 8, 10%. Okay, not believed. Inflationary depression, there's no way out. Can't raise rates, can't cut rates, just like I said before. The big insolvent banks are in the same position as the central banks. They've gotten rid of the GLD, the inventory, so they cannot short the gold market anymore. They got almost $1 trillion in unrealized losses for bonds. They never say that those assets are treasury bonds. They can't sell them, Chris, because from convexity, it would force a snowball effect and a bond default. The big banks are loading up in gold. I did a consult call with a fund manager a few months ago. He said, Jim, every Wall Street bank has gold and they're doubling their gold. Every Wall Street bank has gold and they're doubling their gold. The depression means they need to cut rates. The inflation means they need to raise rates. You cannot sell a bond with rates going down when inflation is going up. You can't do it. They don't show up. And we're handing money under the table, Chris, to England.
The Brics nations are expected to continue raising interest rates due to excessive debt levels. Jim Willie predicts a financial crisis by June or July before the November elections, largely driven by a bond crisis. This potential crisis emphasizes the need for careful financial strategies and highlights ongoing concerns about the U.S. economic situation. In a recent discussion, Jim Willie shared insights on economic conditions, emphasizing the significance of gold accumulation by central banks. He predicts that the rising demand for gold will continue to drive its price upward. Despite challenges, Willie remains hopeful about restoring economic stability and returning to a gold standard. He stresses the importance of addressing societal and economic issues, advocating for a return to traditional values and a focus on economic growth through innovative technologies like Tesla patents for energy production. Willie also touched on the broader societal impact, expressing hope for a cultural shift back to fundamental values. He emphasizes the role of divine intervention in overcoming challenges and highlights his personal experiences of protection and guidance through faith. He calls for the exposure of negative influences within the country and a renewed commitment to traditional values and divine guidance.
To Belgium and to Ireland, we're handing money under the table for them to show up and buy our bonds. And it's not showing up on the tick report because they're giving it right back under the table and it's going to the Fed balance sheet. Before I get to my list, I'm going to talk to you briefly about what I call foreigners are selling treasury bonds at a record rate. We've got a tremendous amount of supply of bonds. The Department of Treasury is obligated to buy back the bonds. And the Fed is where they put the bonds. So how's the Fed reducing their balance sheet? They're not. They're lying. Or we're tapping the Exchange Stabilization Fund. And let's just leave that for a future date to discuss. Foreigners are selling a huge amount of treasuries. The government's got to buy it, the Treasury Department. They put it on the Fed balance sheet. We got a tremendous amount of bond supply to sell. They're unsuccessful auctions, which means we put a lot on the balance sheet.